Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, with the price fluctuating within a range, but generally moving higher. The forecast price also suggests continued growth, with values steadily increasing over the next week. This positive momentum, coupled with the long-term nature of the investment, aims to capitalize on the potential for significant appreciation in the value of Bitcoin. Therefore, a long position is recommended, with an entry price around $98,000. This allows for a margin of safety, entering after a slight pullback from the recent highs. A stop loss should be placed at $96,500, protecting against unexpected market downturns. The target price is set at $102,000, reflecting the optimistic forecast and potential for continued upward movement. This strategy aims to capture a substantial profit while mitigating risk through a well-defined stop loss. Based on the provided Bitcoin Cash price history and forecast, a short-term investment strategy appears most suitable. The historical data shows a volatile price trend, with a recent upward movement followed by a correction. The forecast predicts a continued downward trend over the next week. This suggests a potential opportunity to profit from a short position. Therefore, an investment strategy for Bitcoin Cash would involve taking a short position with an entry price of $555. The stop loss should be set at $587.60, the resistance price, to limit potential losses. The target price would be $518.90, the support price, aiming to capture a significant portion of the predicted decline. This strategy capitalizes on the short-term bearish outlook indicated by the price history and forecast. Given the price trends and forecast for stacks, a medium-term investment strategy appears to be the most suitable approach. While the historical prices show some volatility, the forecast indicates a gradual decline over the next week. This suggests a cautious outlook for stacks in the short term. However, the support price at $2.334 provides a potential buying opportunity for a medium-term investment. Therefore, a long position is recommended, aiming to capitalize on a potential rebound after the predicted dip. An entry price of $2.35 would allow you to buy in near the support level, with a stop loss set at $2.25 to limit potential losses. The target price should be set at $2.60, aiming to profit from the predicted upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Ethereum's recent price history exhibits both upward and downward movements, with a recent surge towards $4,000. The forecast suggests a continuation of this upward trend, with prices expected to reach around $3,850. Considering the support price at $3,655.93 and the resistance at $3,834.19, a short-term long position appears to be a viable strategy. We can enter a long position at $3,750, a price point slightly below the current market price and below the resistance level. The stop loss can be placed at $3,660, protecting against potential downside risks. The target price can be set at $3,900, allowing for a potential profit of approximately 3.8%. This strategy capitalizes on the anticipated upward momentum while managing risk through a well-defined stop-loss level. Given the price trends and forecast for Ripple, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating trend with recent upward movement, while the forecast indicates continued growth. The support price at $0.5484 suggests a solid base for the price, while the resistance at $2.6028 presents a potential ceiling. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An ideal entry price would be around $2.35, aligning with recent price action and below the current forecast. A stop loss should be placed at $2.21, slightly below the recent low, to protect against potential price reversals. The target price could be set at $2.60, aiming to capture a significant portion of the potential upside before reaching the resistance level. This strategy allows for a medium-term investment horizon, allowing the price to potentially appreciate towards the target while mitigating risk through the stop-loss mechanism. Based on the provided price information for Binance Coin, a short-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a volatile trend with both upward and downward movements. While the forecast suggests a slight decline in price over the next week, the price remains relatively close to its support level of $676.79. This proximity to support suggests a potential for a rebound, making a short-term bullish position potentially lucrative. To execute this strategy, an entry price of $688 could be considered, allowing for a small margin of safety above the current price. A stop-loss order should be placed at $676.79, the support level, to limit potential losses. The target price could be set at $712, aligning with the forecast's higher end and offering a reasonable profit margin. This short-term strategy capitalizes on the potential for a price rebound while managing risk through a well-defined stop-loss order. Based on the provided information for Stellar, a cautious investment strategy focusing on the short term appears most suitable. The historical price data reveals a fluctuating trend with no clear upward or downward momentum. The forecast predicts a continued decline in price over the next week, suggesting a bearish outlook. Given these factors, a short position is recommended to capitalize on the potential price drop. A conservative entry price of $0.487 aligns with the current price and the lower end of the recent price range. A stop loss should be set at 51 cents, slightly above the current price, to limit potential losses if the price unexpectedly rebounds. The target price can be set at 45 cents, which aligns with the forecasted lowest price and allows for a reasonable profit margin. This strategy aims to profit from the anticipated short-term decline in Stellar while minimizing risk through a well-defined stop loss. The provided information suggests a cautious approach to investing in Toncoin. While the historical price data shows some volatility, the recent 2-week price change indicates a downward trend. The forecast also predicts further declines in the coming week. Considering this bearish outlook and the price information, a short-term investment strategy focusing on a short position appears more suitable. An entry price around $6.35, aligned with the recent price action and slightly above the predicted low, would be a prudent starting point. To manage risk, a stop-loss order could be placed at $6.445, above the current price and near the resistance level. This would limit potential losses if the price unexpectedly moves upwards. The target price could be set at $5.94, slightly above the predicted lowest price, allowing for profit taking before reaching the support level. This strategy aims to capitalize on the anticipated price decline while minimizing potential losses. Based on the provided Cardano price information, a cautious yet potentially profitable investment strategy emerges. The historical price data reveals a volatile trend with both upward and downward movements. However, the forecast suggests a slight upward trajectory in the coming week. Considering the support price at $1.073 and the resistance price at $1.2296, a long position seems more suitable. We propose entering a long position at $1.10, aiming to capitalize on the potential price increase towards the resistance level. A stop loss should be placed at $1.07, below the support price, to limit potential losses. The target price is set at $1.20, allowing for a reasonable profit margin while staying below the resistance. This strategy balances risk and reward, taking advantage of the potential for upward movement while mitigating potential downsides. Based on the provided Litecoin price history, forecast, support, and resistance levels, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, with recent fluctuations around the $130 mark. The forecast indicates a continued upward movement, albeit with some minor corrections. This suggests a bullish sentiment in the medium term. Therefore, I recommend taking a long position in Litecoin. An entry price around $120, slightly below the current market price, allows for a margin of safety while still capturing potential upside. The stop loss should be set at $110, slightly below the support price, to protect against unexpected price drops. The target price should be set at $140, aligning with the resistance level and reflecting the potential for significant price appreciation in the medium term. This strategy balances risk and reward, aiming to capitalize on the bullish Litecoin outlook while mitigating potential losses. Based on the provided price data for STRK, a bullish investment strategy appears promising. The historical price data demonstrates a consistent upward trend, with recent peaks exceeding previous highs. While the forecast indicates slight fluctuations, the overall trajectory suggests continued upward momentum. This sustained upward movement, coupled with the forecast's relatively high predicted prices, suggests a potential for significant gains in the short to medium term. Therefore, a long position in STRK is recommended. An ideal entry price would be around $4.20, aligning with the recent highs and the forecast's projected prices. To manage risk, a stop-loss order should be placed at $4, protecting against potential price reversals. The target price could be set at $4.50, aiming to capture a substantial portion of the anticipated upward movement. This strategy capitalizes on the bullish momentum and aims to generate significant returns within a relatively short time frame. Based on the provided information for Aptos, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, hovering around the $13 to $14 range. While the forecast suggests a slight dip in the coming week, the support price at $12.70 acts as a strong buffer, preventing a significant decline. Considering these factors, a long position could be considered, aiming to capitalize on a potential rebound towards the resistance level of $14.68. The entry price should be set at $13, aligning with the current price and the predicted price movement. A stop loss at $12.60 would protect against substantial losses if the price drops below the support level. The target price can be set at $14.50, allowing for a reasonable profit margin before reaching the resistance. This strategy aims to capitalize on the short-term volatility of Aptos while mitigating risk through a well-defined stop loss. Based on the provided data for SE, a short-term bearish investment strategy appears most suitable. The historical price data shows a recent downward trend, with the current price hovering near the support level of $0.5315. The forecast price suggests a continued decline over the next week, with prices potentially dropping to as low as 58 cents. Therefore, an aggressive short-term strategy would involve entering a short position at the current price, around 60 cents. The stop loss should be set at $0.644, slightly above the recent high, to limit potential losses. The target price could be set at $0.563, aligning with the forecast low and providing a reasonable profit margin. This strategy capitalizes on the anticipated downward momentum of SE, aiming to profit from the price decline within a short time frame. Based on the Ethereum Classic price data, a medium-term investment strategy appears to be most suitable. The historical price shows an overall upward trend with recent consolidation. The forecast suggests a slight upward movement, but with some potential volatility. The support price of $19.48 provides a solid base for a potential rebound, while the resistance at $38.35 indicates a ceiling for the short term. Therefore, a long position is recommended. An entry price around $31.50, slightly above the recent consolidation range, allows for potential upside while minimizing immediate risk. The stop loss should be placed at $30.50, just below the recent lows, to protect against unexpected downturns. The target price could be set at $35, aiming to capitalize on the potential upward movement towards the resistance level. This strategy balances risk and reward, allowing for potential gains over a medium-term horizon while mitigating potential losses. Polygon's historical price data shows a volatile trend with both upward and downward movements. The recent price has been fluctuating around the support price of $0.5832, indicating potential buying opportunities. The forecast price suggests a slight upward movement in the coming week, reaching around $0.653. Considering the current price, forecast, and support level, a long-term investment strategy seems appropriate. Therefore, I recommend a long position on Polygon with an entry price around $0.585, slightly above the support level. The stop loss should be set at $0.575 to protect against unexpected downward movements. The target price could be set at 70 cents, aiming for a potential profit of around $19%. This strategy allows for capitalizing on the potential upward momentum while managing risk effectively. Given the price trends and forecast for AEVO, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a recent decline, and the forecast suggests further price drops over the next week. The support price is located at $0.4727, indicating a potential floor for the price, while the resistance sits at $0.5031, suggesting an unlikely upward breakout in the near term. Therefore, a short position on AEVO is recommended. An aggressive entry price could be around $0.495, allowing you to capitalize on the anticipated decline. Setting a stop loss at $0.5031, just above the resistance level, would protect against any unexpected upward movements. A target price of $0.450, slightly above the support level, would allow you to secure profits before the price potentially finds a temporary bottom. Based on the provided price history and forecast for optimism, a short-term bearish investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the 1-week forecast predicts further declines. The current price is hovering near the resistance level of $2.563, suggesting potential for a pullback. Therefore, an aggressive short-term investment strategy would involve taking a short position at the entry price of $2.48. This price point aligns with the current market conditions and offers a potential entry before a further decline. The stop loss should be placed at $2.56, slightly above the current price, to limit potential losses if the price unexpectedly rises. The target price for this strategy would be $2.24, aligning with the lowest predicted price in the forecast, allowing for a profit opportunity before the price potentially rebounds. Based on the provided price history and forecast for STRK, a short-term bearish strategy appears to be the most suitable. The 2-week price change demonstrates a downward trend, and the forecast indicates further declines. The current price is relatively close to the support price of $0.6379, suggesting that a break below this level could trigger a more significant downward movement. Therefore, an investment strategy focusing on a short position with an entry price at $0.645, a stop loss at $0.654, and a target price at $0.625 is recommended. This approach aims to capitalize on the potential price decline towards the support level. The stop loss placement above the entry price helps to limit potential losses, while the target price is set below the current price to ensure a profit if the bearish outlook proves accurate. Given the historical price trends and the 1-week forecast for Solana, a short-term investment strategy appears most suitable. The price history shows a downward trend over the past 2 weeks, and the forecast predicts further declines. The current price is close to the support level of $225.69, suggesting a potential bounce. However, the forecast indicates that this bounce might be short-lived, with prices likely to fall below the support level in the coming week. Therefore, a short position would be advisable to capitalize on this anticipated decline. An aggressive short-term investment strategy could involve entering a short position at the current price of $227. The stop loss should be set at $237.99, the resistance level, to protect against any unexpected upward movement. The target price could be set at $216, aligning with the lowest predicted price in the forecast, allowing for potential profits before the market potentially reaches the support level. This strategy aims to capitalize on the short-term downward momentum of Solana. Given the price trends and forecast for Jupiter, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile trend with recent declines, and the forecast suggests further downward movement. The support price at $1.0505 indicates a potential floor for the price, while the resistance at $1.1506 suggests an upper limit for upward movement in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.13, aligning with the recent historical price and the forecast, would be suitable. The stop loss should be set at $1.15 to protect against any unexpected price surges. The target price should be set at $1.06, slightly above the support price, allowing you to take profits before the market hits major support. This strategy aims to minimize risk while capitalizing on the potential for a short-term price decline. Given the price trends and forecast for render, a medium-term investment strategy appears suitable. The historical prices show an upward trend, with recent fluctuations suggesting consolidation. The forecast indicates a potential price increase, reaching around $9.88 in the coming weeks. However, the forecast also suggests some volatility, with prices potentially dipping towards $9.42 before recovering. This indicates a period of consolidation and potential sideways movement before a possible upward surge. Therefore, a medium-term long position is recommended for render. An entry price around $9 would allow you to buy in at a relatively attractive price, considering the recent consolidation and the potential for future growth. The stop loss should be set at $8.73, slightly below the support price of $8.729, to protect against unexpected downward movements. The target price could be set at $10, aiming to capitalize on the potential price increase towards the resistance level. This strategy allows you to participate in the potential upside of render while managing risk through a well-defined stop loss. Given the price trends and forecast for Solana name service, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating pattern with an overall upward trend. The forecast indicates a slight dip in the coming week, followed by potential recovery. This suggests a period of consolidation before a potential upward movement. Therefore, a long position is advisable. An entry price around $0.340 could be considered, allowing for some room to absorb potential short-term volatility. The stop loss should be placed below the recent support level of $0.333 to minimize risk. The target price could be set at $0.367, aligning with the recent resistance level, aiming to capitalize on the potential upward momentum. This strategy allows for participation in the potential upside while managing risk through a well-defined stop loss. Based on the provided information for Doge-Coin, a short-term investment strategy appears to be the most suitable. The historical price data shows a fluctuating trend with recent price movements suggesting potential volatility. The forecast price indicates a slight upward movement, but the relatively narrow range suggests limited upside potential. The support price of $0.4081 acts as a strong base, while the resistance price of $0.43984 presents a potential ceiling for immediate price growth. Given these factors, a long position could be considered, with an entry price near the support level of $0.4081. A stop loss could be placed slightly below the support at $0.405 to minimize potential losses. The target price would be set around $0.435, aligning with the forecasted price peak. This strategy aims to capitalize on a potential short-term upward movement while managing risk effectively. PEPE shows a recent upward trend with a potential for further growth according to the provided forecast. The historical price data also suggests a positive momentum, with the price consistently moving above the support level. The forecast indicates that the price could reach $0.0000267 in the coming week, representing a significant increase from its current levels. Considering these factors, a long-term investment strategy in PEPE appears promising. An entry price around $0.0000235, close to the recent dip, would allow for a good risk-reward ratio. A stop-loss order should be placed at $0.0000222, below the support price, to minimize potential losses. The target price could be set at $0.0000267, aligning with the highest forecast price, allowing for a substantial profit if the upward trend continues. Given the price trends and forecast for SHIB, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with recent dips, while the forecast suggests a slight downward movement in the coming week. Although the price is close to its support level of $0.0000271, the resistance at $0.0000322 indicates potential for a pullback. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For an aggressive short-term investment strategy, an entry price of $0.0000288 could be considered, aligning with the recent price fluctuations. The stop-loss should be set at $0.0000296 to protect against any unexpected price surge. The target price should be set at $0.0000272, allowing you to take profits before the price reaches the support level. This strategy aims to capitalize on short-term price volatility while managing risk through a defined stop-loss order. Based on the provided price information for Dog with Hat, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price history demonstrates a volatile trend with both upward and downward movements. The forecast indicates a continued downward trend, suggesting a potential for further price decline in the coming week. While the support price sits at $3.009, providing a potential floor, the resistance price of $3.428 presents a significant barrier to upward movement. Considering these factors, a short position on Dog with Hat is recommended for a short-term investment horizon. An entry price of $3.18 aligns with the current price and the forecast's initial decline. The stop-loss should be set at $3.29, slightly above the current price, to minimize potential losses if the price unexpectedly surges. The target price should be set at $2.85, aligning with the forecast's lowest projected price, allowing for profit-taking before reaching the support level. This strategy aims to capitalize on the anticipated price decline while managing risk effectively. Given the historical price data and the forecast for Doge-Coin, a cautious investment strategy would focus on a short-term approach. The recent price trend shows a downward movement, and the forecast predicts further declines in the coming week. The support price at $0.007679 and the resistance price at $0.008439 indicate a potential for a further drop towards the support level. Therefore, a short position on Doge-Coin seems more suitable. An aggressive entry price could be around $0.00835, aligning with the recent price action and the forecast. A stop-loss should be placed at $0.00881 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.007679, aiming to capture the potential decline towards the support level. This strategy prioritizes risk management and capital preservation while aiming to capitalize on the anticipated price movement in the short term. Based on the provided price data for NEAR protocol, a short-term investment strategy appears to be the most suitable approach. The historical prices indicate a recent decline, with the current price hovering near the support level of $6.419. The forecast suggests a continued downward trend, with prices potentially falling to around $6.70. This bearish outlook, coupled with the proximity to support, presents an opportunity for a short position. An entry price of $6.85, slightly above the current price and the support level, would allow for some room to maneuver while still capturing potential downward movement. The stop-loss should be placed at $7.04, slightly above the recent high and the entry price, to limit potential losses. The target price could be set at $6.419, aligning with the support level, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the short-term bearish outlook for NEAR protocol while managing risk through a well-defined stop-loss. Given the price trends and forecast for Internet Computer, a medium-term investment strategy appears to be most suitable. The historical prices demonstrate a fluctuating trend with a slight downward bias. However, the forecast suggests a period of consolidation around $13, which aligns with the support price of $12.035. This indicates a potential for a sideways movement in the near future. Therefore, a long position would be advisable, with an entry price around $12.50, slightly above the support price to account for potential volatility. The stop loss should be set at $12, protecting against a significant drop below the support level. The target price could be set at $14.50, aiming to capture a potential upward move towards the resistance level of $15.19. This strategy allows for capitalizing on the potential for a price increase while managing risk through a well-defined stop loss. Based on the provided injective price information, a cautious investment strategy suggests a short-term approach with a focus on a short position. The 2-week price history demonstrates a fluctuating trend, but the 1-week forecast indicates a downward trajectory. The current price is relatively close to the resistance level of $34.07, suggesting potential for a pullback. Therefore, an entry price of $33 would allow you to capitalize on the anticipated price decline. Setting a stop loss at $34, slightly above the entry price, helps mitigate potential losses if the price unexpectedly moves upwards. The target price should be set at $28, aligning with the forecasted lower price point, allowing for profit taking before the price potentially reaches the support level of $27. This strategy prioritizes risk management while aiming to capitalize on the short-term bearish outlook for injective. BTC's historical price data reveals a fluctuating trend, with recent price movements suggesting potential volatility. The forecast indicates a downward trajectory for the next week, raising concerns about a potential price decline. Considering the support price of $527.20 and the resistance price of $616.1, a short-term bearish outlook appears more likely. Therefore, an investment strategy for BTC should involve a short position, aiming to capitalize on the anticipated price decline. A conservative entry price would be around $600, aligning with the recent price action and the forecasted downward movement. The stop loss should be set at $616.1, the resistance level, to protect against any unexpected price surges. The target price could be set at $557, slightly above the lowest forecasted price, allowing for potential profits while mitigating risk. This strategy prioritizes short-term gains and emphasizes risk management by utilizing a tight stop loss and a realistic target price. Given the provided price history and forecast for THETA network, a cautious short-term investment strategy appears most suitable. While the price has shown some upward momentum recently, the forecast suggests a decline over the next week. The historical price data reveals a volatile trend, with fluctuations both upwards and downwards. Therefore, a short position on THETA network could be considered. An entry price at $2.55 aligns with the forecast decline and allows for potential profit if the price moves towards the predicted lower range. A stop loss at $2.65 would help mitigate potential losses if the price unexpectedly rises. The target price should be set at $2.38, which represents a reasonable profit margin based on the forecast and historical price movements. This strategy allows for capitalizing on the potential price dip while managing risk effectively. Given the price trends and forecast for WorldCoin, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show some volatility, with recent fluctuations ranging from $2.84 to $3.91. The forecast indicates a potential dip in the coming weeks, with prices projected to fall below the current level. The support price sits at $2.948, suggesting this level might provide a floor for the price. Therefore, a short position seems more suitable. An aggressive entry point could be around $3.13, aligning with the recent price action and slightly above the forecast. A stop loss should be set at $3.30, protecting against any unexpected upward movement. The target price could be set at $2.95, aiming to capitalize on the potential price decline towards the support level. This strategy allows for a relatively short-term investment horizon, aiming to profit from the anticipated price correction while managing risk through a defined stop-loss order. Hooked Protocol's historical price data shows a fluctuating trend, with recent peaks around 68 cents and a recent dip to 52 cents. The forecast suggests a continued downward trend, with prices potentially reaching 55 cents in the coming weeks. Considering this information, a short-term bearish strategy appears more suitable. To execute this strategy, we recommend entering a short position at the current market price, around 57 cents. The stop loss should be placed at 59 cents, slightly above the current price, to limit potential losses if the market unexpectedly reverses. The target price for this short position is set at 53 cents, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the short-term bearish outlook suggested by the price history and forecast, while incorporating risk management measures to protect against potential market reversals. Based on the provided data for Artificial Superintelligence Alliance, a short-term investment strategy appears most suitable. The historical price data shows a recent upward trend, but the forecast indicates a slight pullback in the coming week. The current price is relatively close to the resistance level, suggesting a potential for profit-taking and a correction. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decline. An aggressive entry price could be around $1.83, aligning with the resistance level. The stop loss should be set at $1.91, slightly above the highest forecast price, to limit potential losses. The target price could be around $1.72, aligning with the support price and allowing for a reasonable profit margin. This strategy leverages the short-term price fluctuations and aims to capture potential gains from the predicted pullback. Polkadot shows a fluctuating price trend over the past 2 weeks. Although the price has dipped recently, the forecast suggests a potential upward movement in the coming week. The support price at $8.975 indicates a potential floor for the price, while the resistance at $10.638 suggests an upper limit for the near future. Given this information, a medium-term investment strategy appears suitable. We can initiate a long position in Polkadot at the entry price of $9.20, aligning with the current price and anticipating a potential upward move towards the resistance level. The stop loss should be set at $8.95 to minimize potential losses if the price falls below the support level. The target price can be set at $10.20, allowing for a reasonable profit margin before reaching the resistance. This strategy capitalizes on the potential for a price increase while managing risk effectively. Given the price trends and forecast for Filecoin, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern with a general upward trend. The current price is near its recent high, but the forecast suggests a slight dip in the coming week. This indicates a potential buying opportunity for a medium-term investment. Therefore, I recommend a long position in Filecoin. A suitable entry price would be around $6.50, allowing you to buy in at a slightly discounted price compared to the recent highs. The stop loss should be set at $6.20 to protect against any significant price drops. The target price could be set at $7.50, aiming to capture the potential upside momentum as the price moves towards the resistance level. This strategy balances risk and reward, capitalizing on the positive long-term outlook for Filecoin while mitigating potential losses in the short term. Based on the provided price data for Conflux, a short-term investment strategy appears to be the most suitable approach. The recent price history shows a fluctuating trend with a slight downward bias, and the one-week forecast predicts further declines. The current price is near the resistance level of $0.2522, suggesting that a pullback is likely. Therefore, a short position on Conflux is recommended. An ideal entry price would be $0.248, slightly above the current price to allow for some potential price fluctuation before entering the trade. A stop-loss order should be placed at $0.252 above the entry price and the current resistance level to limit potential losses. The target price should be set at $0.205, aligning with the support level and the forecast price decline. This strategy aims to capitalize on the anticipated short-term downward price movement in Conflux. Given the price trends and forecast for Ethereum name service, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical price data shows a fluctuating pattern but generally trending upwards. The forecast predicts further upward movement, with prices potentially reaching $43. The support price at $20.53 suggests a strong foundation for potential growth. Therefore, an aggressive investment strategy would involve entering a long position at the current price, around $35, with a stop-loss set at $34 to minimize potential losses. The target price could be set at $42, aiming to capitalize on the predicted upward momentum. This strategy capitalizes on the potential for short-term gains while managing risk through a defined stop-loss. Based on the provided avalanche price information, a medium-term investment strategy appears most suitable. The 2-week price history reveals a volatile trend with both upward and downward movements, suggesting a period of consolidation. The forecast indicates a slight upward trend, with prices potentially reaching around $49. This, coupled with the current price hovering near the support level of $44.82, suggests a buying opportunity. Therefore, an investment strategy would involve taking a long position on Avalanche. A suitable entry price would be around $45, allowing for a buffer above the support level. A stop-loss order could be placed at $44, safeguarding against significant price drops. The target price could be set at $53, aiming to capitalize on the potential upward movement indicated by the forecast and the historical price action. This medium-term strategy allows for potential profit while mitigating risk through the stop-loss order. Given the price trends and forecast for VeChain, a medium-term investment strategy appears to be most suitable. The historical prices show a recent upward trend, with VeChain breaking through its previous resistance level. The current price is near the support level of $0.05565, suggesting a potential for consolidation before further upward movement. The forecast indicates a continued upward trend, with prices potentially reaching $0.0632 in the coming weeks. Therefore, a long position is recommended. An aggressive investor could enter the market at the current price around $0.05565. A stop-loss should be placed slightly below the support level at $0.0550 to limit potential losses. The target price could be set at $0.0630, aiming to capture a significant portion of the projected price increase. This strategy allows for capital appreciation while managing risk through a well-defined stop-loss. Given the price trends and forecast for PENDLE, a medium-term investment strategy appears most suitable. The historical prices demonstrate a volatile trend with both upward and downward swings. The forecast suggests a slight downward movement in the coming week, indicating a potential consolidation phase. However, the support price at $5.924 provides a strong base, suggesting that further significant declines are unlikely. Therefore, a long position is recommended with an entry price around $5.95, slightly above the support level. This allows for potential upside if the price rebounds towards the resistance level of $6.374. The stop-loss should be set at $5.89 to limit potential losses if the price drops below the support. The target price can be set at $6.30, aiming to capture a significant portion of the potential upward movement. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Based on the Sandbox price information, a medium-term investment strategy appears most suitable. The historical price data shows the Sandbox experienced a significant upward trend, reaching a peak of $0.924 before encountering resistance and experiencing a correction. The forecast prices suggest a potential rebound, with prices projected to rise above the current levels. Therefore, a long position is recommended for a medium-term investment horizon. An ideal entry price would be around $0.750, which represents a good entry point considering the recent price dip and the potential for a future upward movement. The stop loss should be set at $0.699, the lowest point in the recent price history, to limit potential losses. The target price can be set at $0.9168, the recent resistance level, aiming to capitalize on the potential for the sandbox to break through this resistance and reach new highs. This strategy allows for a balance between risk and reward, taking advantage of the anticipated price increase while mitigating potential downside risks. Given the price trends and forecast for Decentraland, a medium-term investment strategy would be suitable. The historical prices show a fluctuating pattern, with recent declines. The forecast suggests a potential for a slight upward movement in the coming weeks. The support price at $0.5921 acts as a potential buying opportunity, while the resistance at $0.7681 presents a potential profit-taking level. Therefore, a long position is recommended to capitalize on the potential upward momentum. An entry price of 62 cents would allow you to enter the market near the current price and below the recent highs. The stop loss should be set at $0.5921, protecting against a significant drop below the support level. The target price can be set at $0.7681, aiming to capture the potential upside towards the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating losses. Based on the provided information for ENG coin, a medium-term investment strategy appears most suitable. The historical price data demonstrates a general upward trend, with recent fluctuations suggesting consolidation. The forecast prices indicate a potential dip followed by a slight recovery, aligning with the consolidation pattern. Considering this, a long position is recommended. The entry price should be around $0.295, slightly below the recent lows, allowing for potential upside as the price recovers towards the forecast highs. The stop loss should be set at $0.276, below the support price, to minimize potential losses. The target price can be set at $0.377, aligning with the recent highs and the forecast, aiming to capitalize on the anticipated price increase within the medium term. Based on the provided price history and forecast for Uniswap, a short-term investment strategy appears to be the most suitable. The historical data shows a fluctuating price pattern, with recent price increases followed by a slight dip. The forecast suggests continued upward momentum, but with some potential for consolidation. Given this scenario, a long position is advisable to capitalize on the potential price increase. An ideal entry price would be around $15.80, slightly above the current price and near the support level. This allows for a potential entry point with room for upward movement. The stop loss should be set at $15.60, just below the support level, to minimize potential losses. The target price could be set at $17.20, aligning with the highest point of the recent price surge and the forecast's projected price increase. This strategy allows for a balanced risk-reward profile, aiming to capture potential gains while mitigating potential losses. Based on the historical price data and the forecast for Chainlink, an investment strategy focusing on a short-term perspective with a long position appears to be favorable. The historical prices demonstrate a clear upward trend, with the price recently breaking above the resistance level of $26.33. This suggests that bullish momentum is present, and the forecast indicates continued upward movement in the coming week. Therefore, an entry price of $26 would allow you to capitalize on this upward momentum. A stop loss at $25 would protect against any unexpected price reversals, while a target price of $27 allows for a reasonable profit margin before the price potentially reaches its next resistance level. This strategy aims to take advantage of the short-term bullish sentiment surrounding Chainlink. Based on the provided historical price data and the forecast for Aave, a medium-term investment strategy appears most suitable. The historical prices demonstrate a clear upward trend, with recent surges indicating strong buying pressure. The forecast further reinforces this bullish sentiment, projecting continued price increases over the next week. This suggests a potential for capital appreciation within a medium-term horizon. A conservative entry price of $280 would allow you to capitalize on the current price momentum while minimizing the risk of entering at a peak. A stop loss at $270 would safeguard your investment in case of an unexpected price reversal. The target price should be set at $310, aligning with the forecasted price trajectory and allowing for substantial profit potential. This strategy balances risk and reward, capitalizing on the bullish outlook for Aave while implementing prudent risk management measures. Based on the provided EOS price information, a short-term investment strategy appears most suitable. The historical price data reveals a recent upward trend, reaching a peak of $1.36. However, the price has since corrected downwards, suggesting a potential pullback. The forecast price also indicates a downward trajectory in the coming week, aligning with this bearish short-term outlook. Therefore, a short position on EOS is recommended. An entry price around $1.10 aligns with the current price and the forecasted decline. A stop loss should be placed at $1.15 to limit potential losses if the price unexpectedly surges. The target price can be set at $1.05, aiming to capture a portion of the anticipated downward movement. This strategy capitalizes on the short-term bearish momentum while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Tron, a medium-term investment strategy appears promising. The historical price data reveals an overall downward trend, with recent fluctuations around the support level of $0.262. The forecast suggests a gradual upward movement, with prices potentially reaching around $0.292 in the coming weeks. This indicates a potential buying opportunity at the current price levels, with room for growth in the medium term. Therefore, an investment strategy for Tron would involve taking a long position. A suitable entry price would be around $0.269, slightly above the recent support level. The stop loss should be set at $0.262, protecting against a further decline below the support. The target price could be set at $0.292, aligning with the forecast high. This strategy allows for capitalizing on the potential price increase while managing risk through a defined stop loss. Based on the provided Suncoin price history and forecast, a medium-term investment strategy appears most suitable. The price has experienced significant volatility, with a recent surge followed by a pullback. The forecast suggests a gradual upward movement, indicating potential for profit over the medium term. Therefore, I recommend entering a long position at the current price of around $0.0242. The stop loss should be placed at $0.02388, slightly below the identified support price, to minimize potential losses. The target price can be set at $0.0268, aligning with the highest forecast price, allowing for a reasonable profit margin. This strategy allows for capitalizing on the predicted price increase while managing risk through a well-defined stop loss.